Stock market analysis and projections on the S&P 500. First, look at this important information. Please take a moment to read this slide. It tells you about our approach to analysis in the markets and about you using our information and the very, very important aspect of trade ownership. You must own your own trades. This is our level 1 special, final weekend. We don't do this very often. It's really an opportunity for people to really learn about our analysis who have not seen it or are free members and want to step up and get analysis from us every single day on the S&P 500, NASDAQ, Russell by getting our stock index report. And that's just a fantastic report. It gives you our 2-hour daily and weekly charts, projections, key levels, and momentum conditions. Matt does a spectacular job with that every single day. You're also going to get our momentum tracker for investors and position traders. It's over 1,000 symbols with our custom algorithms in there and our directional bias tracker. You're going to see it's fantastic. You'll get our Spider ETF weekly review. You'll be able to use our trade organizer. You'll be able to have access to our Discord channel, which means you'll connect with our communities and get support from our analytical team. And you will attend our Market Week live events and be able to come in there and ask in the Q&A segment about things that you're interested in the market. All of that just $10 non-recurring. Sign up. You will not get charged again if you do that. Take a look how you do that. You just come up here. You see where it says final weekend on our website, and you just click on that, and it gives you all of the information that you're going to want to know and the opportunity to sign up for just $10 non-recurring. Remember, non-recurring. And it gives you an idea of all of the great things that are in this special for level 1. And you'll be getting all of our charts, as you see right over here, our workbench trade planning worksheets, as you see right here, and just so many ways that you can learn. Here's our momentum tracker, which is just spectacular for longer term holders and position traders. You get all of this great information there, all of that included, just crazy. And oh yes, there's me, early 1980s, doing paper charts, cycle analysis charts on paper, and that was, yes, that was some 40 years ago. Wow. So please do subscribe to our level 1 deal. Click the buy now, and then you will be able to get all of this great information. So please go to the top of our website right now and sign up. Just $10. All right, stock market analysis. We're going to look at cycle analysis and projections and look at our level 4 indicators as we look at the SPY. And we're going to take a broad look at the worldwide markets as we use our MCM. So I'm going to go back to our website right over here, and I want you to see our market condition monitor. So I'm looking at things a little differently in here. You see I've typed in XL. I'm just going to remove that and type in XL. And what I have it set up on is the trader style. So you can look at traders or time frame style, and you can look at intermediate, short-term, near-term, intraday. This is for the different style of traders. I want to focus on short-term because we're looking at 1 to 3 weeks in here. And I want you to see the information that's going on. So I'm looking at XL, which is XLB, XLC, XLE, and I want you to see what's going on in the last week. And that is, while the stock market's moved up to test the all-time highs that it's made, and it's still been strong, what's going on in here has been a lot of changes in here that are basically downticks. So XLB ticked down to slightly bearish. XLC was slightly bearish, just to tick up to neutral again today. And you've had a downtick here to slightly bearish in XLE, XLI. XLK has a downtick from bullish to neutral, as you can see right over there. And XLP, you can see slightly bearish right there. And one right over here that we want to see is XLRE, that is bullish, and XLU is neutral, utility. So this gives you a good idea what's going on in this last several days, as we've had a lot of these algorithms pointing to changes on the downside while the stock market was showing strength. And I think this is important because this could be the sign of the deterioration, the first deterioration, as we get into this period where we think there's going to be a correction. I wanted to look also at world markets. So I can look at that by looking at EW. Just hit EW and it brings up all of these in a row right there of the different countries. And I want you to see here, Australia bearish, EWC gets Canada slightly bearish. We have Germany as neutral, and that gave us a little uptick here today. It was bearish as the market ticked up. EWJ, that's Japan, bearish. EWQ, very bearish. EWU, the UK, is bearish. EWW, Mexico, is bearish. EWY is that Australia is bearish. EWZ is actually had an uptick here to neutral. So I want you to see, not only are we looking at the U.S. sectors giving us warnings this week on the short term, but our algorithms are also warning us about these country ETFs also having these downticks in here, giving us some sense that there is a topping going on under the hood of the market, essentially, is what I wanted to show you. I think this is really important. So let's just look at what's going on here in the stock market. And we have, as we look at the short term, still things are quite mixed as we get these upticks in the Mag 7 stocks. And they are helping the technology, as you can see right there. And let me just get this to show me properly. There we go. And so we have here the SPY as neutral, the QQQ is bullish, and now you see IWM and Dow turning down yesterday to slightly bearish. So we have this disparity going on in the market right now. And for those of you that get our MCM, the Market Condition Monitor, do watch this, especially for the short-term readings or near-term readings. That will then give you a good sense for the market. A lot of what I showed earlier on, when you look at the different groups where I go back to Excel, and I'm just going to do that right now that you can see, while a lot of them are deteriorating on the short term, if I go to intermediate term, these are all bullish to very bullish. XLE is neutral right there. But a lot of them are very bullish. Now, what does that say to me? When the intermediate is very bullish and the short term is deteriorating, that we're very likely to be entering very soon into a corrective period where the market gives ground on the downside, but then moves back to the upside. Like I said earlier in the show, if you watch that, I believe that while the market is entering into this corrective period of risk, that it would likely still continue the bull market into 2025 after what I think will be a scary decline. So that's looking at the MCM, the Market Condition Monitor. This is a level 3 and 4 application, and if you are interested in that, you need to become a level 3, 4, or 4 member to be able to access the Market Condition Monitor. Let's go back now and look at the charts as we do our stock market analysis, and we're going to look at the SPY as we look at weekly, daily momentum conditions and 2-hour conditions. And what's notable in here is that the 2-hour conditions have begun to deteriorate, which is always the first of the dominoes when we go into a correction. Also, if you're watching a clip right now, and or only watching and you scroll to the stock market analysis, go to the beginning of the show. I show another chart in there which shows how far stretched the stock market is on the upside and why there's likely to be a correction that is meaningful. Let's take a look here as we look at the SPY, and we have in all of our important fib extensions, supports right in here, minor supports right there, dominant supports right there. What is minor? Minor cycles, which give us those minor supports, and the dominant cycle right over here. When you have both of them entering into this corrective period is when you have your period of risk. There are 2 downside projections in here, one into early November, one into early December, and I will show you why we have those those projections. These two vertical lines here are what we call the cycle timing lines. And in here is where we expect the periods of risk, the greatest downside declines, and then to get into a bottoming process when that happens. But when you get into periods where all the cycles are pointing down is where you get into these yellow corrective periods. And, looking back here for many years, they have been extremely consistent, and we're just getting into that period right now. We had originally thought it would be anywhere Q3, Q4, thought it would be September through November. That was the original. Now, because it's been so defiant and held up so strongly, our analysis has suggested that it can now be a little bit longer and get out into that December period. Let's take a look at the short-term patterns that we see in here. Now, I want you to see on the bottom is our option bias study, and that is still green. That is still saying to us that your option positions need to have a long side bias until the market tells you differently. Now, what would be the signals of the market telling us something differently? It would be in this corrective period right over here, getting the first warning under 569.70. That's the 78.6%. If it breaks under 567.80 right over here, that's that cycle low right there. That would be a breakdown. It says the intermediate correction has started. So in other words, looking back at the weekly, that yellow zone, if it then breaks underneath right over here, that would be almost a certainty that the market correction was going on. Now, this is that period where the low comes out into early November. So the question is, which of these cycles will make the trough? If the market does not accelerate very strongly on the downside over here, it will warn that this next cycle out over here will bring this decline out into early December. These are those two time periods that I'm looking at. We need to get some deterioration before we get that. We see here the slim ribbon is positive right there. We see the reversal scout is positive. Those are all saying the market is still good. However, you can see that this last rally up here, which includes today right there, did not make a new high in the stock market. And I'll show you the 2-hour information is starting to show deterioration, just like I just showed you in the different stock groups or in the different worldwide stock markets. There's a deterioration going on under the hood that very well could mean that the stock market correction is at hand. So this is the daily, still strong, positive, positive, positive. All of that still strong, and the market has resisted the downside still, despite the fact that this shows a period of correction is at hand. When I look at the daily momentum, you can see on here it is still green. This is an area chart of the slim ribbon, and on the bottom is that extremely valuable slim ribbon PO, which when you get the upside arrows, it tells you that momentum is likely to resume on the upside. And you can see you got that right here. It was perfect. Over here, they were fantastic. And you got another one right over here, which said a few days ago that this market was likely to still try the upside, which it has done. So all of this, again, are still positive indicators that we're looking at, despite the fact that this period of risk is very due and the rubber band is very stretched. The market has not shown the weakness yet, though right now we're getting a little bit of deterioration in here as we look at the intraday on this 2-hour chart. As you can see right here, that the slim ribbon PO has turned red. It is about to give a downside arrow, which we have not seen, for many, many weeks. So that's a reason to believe that something is changing. This is likely to come in the next, maybe today here on Friday or on Monday, where we get that downside arrow right there. You can also see that while the slim ribbon on the 2-hour chart was set up positively here, this stays green and gives you those signals. And this is another reason to say that if you're a short-term trader, you want your positions to be on the long side. Now here again, something is changing and you're getting those warnings, just as we're getting on the short term, looking at the worldwide markets and the individual stock sectors. So a bit of weakening that we see going on right over here. the strong likelihood that this period of risk is going to develop into something significant. Don't really know if it's going to be related to how the market trades around the election time. If you remember back in 2016, when President Trump got elected, the stock market overnight was down about 800 points on the Dow and then reversed to the upside. So we can have a lot of volatility, not only in the coming week before the election, but also around and after the election. I would expect there's going to be some very large moves. And just based on this timing, I have to say I'm looking for the downside. And of course, I've been looking for this to develop on the downside for weeks, and it has not yet happened. So the market is the boss, not me. So that's the analysis that I bring you, looking at SPY and sharing with you our important MCM, which really gives you such great information. Still, market solid, but a little bit of deterioration going on, and I gave you those key levels on the downside. That will mean that we're either being warned or the stock market is entering into the corrective period. That's it for my update on the stock market. Please do take advantage of our level 1. This special is in its final weekend. Just 1 month for $10 non-recurring. Great chance for you to try us out.